Welcome back to Smart Stock Sam, where we cut through the noise and analyze the data that actually matter. I'm going to ask you something right now, and I want you to sit with it for a second. What if I told you there is a stock sitting on one of the most explosive technical setups of the entire year, armed with a brand new Pentagon deal that just locked in multi-year government funding, yet the majority of retail investors are still running away from it in fear? That is exactly the situation we are looking at with Palantir Technologies right now. Today, we are breaking down why PLTR is coiled like a spring ready to release, what the Pentagon's latest move means for the price next week, where the key targets sit heading into the week of March 23rd through the 27th, and why the so-called smart money is quietly loading up while everyone else panics. We are covering the full picture: fundamentals, technicals, options flow, institutional positioning, and the macro forces holding this thing down. Grab your notepad. This one is dense, and it matters. Here is the big picture summary before we go deep. There are two forces fighting over Palantir's price right now. On one side, you have short-term noise, geopolitical shocks, macroeconomic fear, and roughly $140,500,000 in insider selling that capped momentum right at the $155 level. On the other side, you have a fundamental signal that is practically screaming generational strength. We are talking about a Rule of 40 score of 127% and institutional ownership models suggesting holdings as high as 60.1%. The stock is currently pinned at the $150 support level, but there is a massive $160 call wall sitting just above it. If that wall breaks with real volume, and this is where things get interesting, we are not just looking at a normal rally. We could be looking at a gamma squeeze that sends this stock rocketing toward $170 and beyond. And the question you should be asking yourself right now is, do you want to already be positioned when that happens, or do you want to be watching it unfold from the sidelines? Stay with me. Before we talk about where we are going, let us validate where we have been. Back on March 15th, we identified $160 as the key to the kingdom, the level that, once broken, would change everything. And what happened? The technical model was validated almost perfectly. On Tuesday, March 17th, Palantir peaked at $156.75 intraday and was rejected. On Wednesday, it tried again, touching $156.69, and got rejected a second time. That $155 zone acted as a concrete ceiling all week, not because the company was weak, not because the thesis was broken, but because the resistance level we identified held exactly as predicted. This was not a failure of the bull case. This was a textbook confirmation of the technical framework we have been building. Now here is the question you have to ask. What was the weight pressing down on the stock and preventing that breakout? The answer is a perfect storm of overlapping friction. First, the VIX, the market's primary fear gauge, surged more than 11% on Friday alone, peaking at 26.78. That kind of spike reflects deep macro anxiety, much of it driven by higher for longer signals coming out of the Federal Reserve. But the VIX spike was only one layer of the storm. We also experienced a major geopolitical shock, with Iranian strikes hitting Amazon data centers and Israeli nuclear facilities simultaneously, triggering a broad, violent risk-off rotation across growth assets. And then, on top of all of that, we had a supply overhang. Verification came in that Peter Thiel and Alex Karp had offloaded a combined $140,500,000 worth of stock. That is a massive amount of supply hitting the market at exactly the wrong time. These three forces, macro fear, geopolitical shock, and insider selling, created a temporary liquidity ceiling that made it nearly impossible for the bulls to absorb the selling pressure. Here is the critical analytical step that separates smart investors from reactive ones. You have to ask whether the factors pressuring the price are permanent or temporary. Geopolitical shocks fade, VIX spikes normalize, Insider liquidity events are routine, not bearish signals about the business itself. These are temporary suppressors. They do not change what the software does. They do not change the contracts. They do not change the moat. The signal, the enduring structural signal, is built from accelerating revenue, widening competitive advantages, and margins that are, frankly, almost absurd for a software company of this size. Despite the severe macro friction last week, Palantir's core thesis remains completely intact. In fact, the internal data suggests the company is fundamentally stronger today than it has ever been. Let us look at those numbers. Palantir delivered year-over-year revenue growth of 70%, reaching $1,410 million. That is not a fluke. The United States commercial segment alone is growing at 137% as enterprise adoption explodes well beyond the defense sector. Here is what makes this genuinely unusual. Most software companies are forced to choose between growth and profitability. You can have one or the other, rarely both. Palantir has both, simultaneously, at historic levels. Their Rule of 40 score, a metric that combines revenue growth rate and profit margin, sits at 127%. To put that in perspective, a score above 40 is considered excellent in the software industry. 127% is virtually unprecedented. Pair that with 43% GAAP net income margins, and what you have is not just a growth story anymore. What you have is a cash flow machine hiding inside a growth narrative. The market has not fully priced this in yet. And if the financials are not enough to make you sit up straight, let me tell you about the metric that very few people are talking about, and it might be the most important competitive advantage in the entire AI landscape. Palantir holds an Impact Level 6 authorization from the Department of Defense. Impact Level 6 is the highest possible security classification for cloud-based software in the United States military. Palantir is the only AI company in the world with this certification. Think about what that means structurally. This is not a competitive advantage. It is a government-certified monopoly within the most classified environments on Earth. It makes Palantir a structural, irreplaceable dependency for national security operations, and it has directly contributed to an $11.2 billion revenue backlog, forward visibility that most public companies would never dream of having. When you own the infrastructure for the world's most sensitive data, you do not just have a product. You have a moat that no competitor can legally cross. Now, with all of that context established, here is the part that makes the setup so fascinating. While retail investors were panic selling during last week's fear cycle, sentiment hit what some models are calling a death cross on March 13th. Institutional trend lines were moving straight up to 45.65%. Some flow tracking models suggest true institutional holdings may have climbed as high as 60.1%. One aggressive buyer, identified as ACM, increased their Palantir stake by a staggering 260% during the exact window of the retail panic. Read that again. A major institutional player tripled their position while everyone else was selling. The big money is not reading the fear headlines. They are exploiting them. Wall Street is getting louder on this too. Analysts are aggressively revising their price targets upward. UBS and Rosenblatt have both raised their targets to $200 per share. Wedbush is calling for an outperform rating with a target of $230. Bank of America and Citi are projecting a move all the way to between $255 and $260 per share. From the current $150 support floor, that represents between 33 and 73% upside. These are not fringe outliers. These are Tier 1 institutions seeing the same coiled spring setup that we are seeing, and the catalysts to release that spring are already arriving. On March 20th, the Pentagon officially designated the Maven AI system as a program of record. This is enormous. It is not just another contract announcement. It locks in stable, multi-year funding across all military branches, the kind of structural revenue certainty that Wall Street rewards with premium valuations. On the commercial side, the Motor partnership with Freedom Mortgage demonstrates that Palantir's ontology platform can rapidly replace legacy software even in highly regulated financial environments. And we also have the $448 million Navy ShipOS integration, which positions Palantir as the operating system for the entire nuclear shipbuilding supply chain. Defense, finance, infrastructure. The diversification story is accelerating. But zoom out even further, and there is an even bigger game being played. Palantir's partnership with NVIDIA to build AI reference architectures for sovereign governments around the world is not a software deal. It is an infrastructure bet. Governments globally are rushing to secure independent artificial intelligence capabilities, what analysts are calling sovereign AI. Palantir and NVIDIA are positioned as the foundational architects of that infrastructure. The total addressable market for this category is projected at $600 billion by 2030. That is the long game the institutions are playing. That is why they are buying into this volatility. Now let us get tactical for the week of March 23rd through 27th. Thursday, March 19th, started strong. The UBS $200 target revision pushed price to an intraday high of $156.15, but we could not challenge the 160 wall. Then, Friday arrived. Even with the Maven Pentagon news hitting the wires, the stock dropped 3.21% to close at $150.68. The VIX peaked at 26.78, and macro liquidation simply overpowered the company's specific good news. The stock is now pinned right at the $150 support level, and that brings us to the critical setup for next week. There is a heavy concentration of over 14,400 call contracts sitting at the $160 strike for the March 27th expiry. This is the wall. If price breaches $160 with meaningful volume, market makers will be mathematically required to aggressively purchase shares to hedge their exposure. That buying creates more buying. It becomes a self-fulfilling, explosive move higher, a gamma squeeze. With 52 million shares currently held short providing the fuel, all it takes is one spark, one macro catalyst, one institutional buy program triggering. Here is your tactical execution plan. The optimal accumulation zone is any retest of the $142 to $145 range. That is the 200-day moving average and the highest conviction long-term support area. Your current floor is $150. The first resistance level to watch is that $155 zone where we were rejected last week. The bull trigger, the level that changes everything, is $160 with volume. Break that, and the squeeze target zone is $167 to $170. That is your map. Those are your levels. Before we close out, a quick but important reminder. Nothing discussed in this video is financial advice. Palantir is a volatile asset. Options trading involves substantial risk of loss. Markets can and do move against even the most well-researched setups. Always do your own due diligence, understand your personal risk tolerance, and consult a licensed financial advisor before making any investment decisions. Smart Stock. SAM is an educational channel. We share analysis, not instructions for selling or buying any equity. Now, the bottom line. Palantir is a coiled spring. The business is fundamentally stronger than it has ever been. Historic margins, a new Pentagon program of record, a government-certified AI monopoly, and an $11 billion-plus revenue backlog. Yet the stock is temporarily pinned at $150 by macro friction that will not last forever. Dips into the 142 to 145 zone are high-conviction accumulation opportunities. Watch the $150 floor for structural stability, and keep your eyes locked on $160, because when that breaks with volume, the move higher could be fast, violent, and very rewarding for those already positioned. Here is my question for you in the comments, and I genuinely want to know your thinking. Do you believe institutional accumulation at 60% ownership is a signal strong enough to override the macro headwinds? Or do you think the VIX and geopolitical risk still dominate the near-term price action? Drop your answer below. I read every single comment. If this breakdown gave you clarity or saved you from a panic sell moment, hit the like button. It takes 1 second and it genuinely helps this channel reach more investors who need this data. Subscribe to Smart Stock Sam if you are not already part of the community, and if you want to help us climb the YouTube Hype leaderboard this week, do use your Hype feature available on YouTube mobile app. I will see you in the next one.